All right, here we are at the midday of the trading session. I'm going to go ahead and look at some of these charts here for you, give you a quick update on what I'm seeing. I'm going to pull up the SPY instead. Volume, it's not going to be all that great. We're dealing with volume levels that are quite a bit. You can see the volume buzz 45, 46% negative. So it's not going to be a high volume day. I don't think we'll even see the volume totals that we got from yesterday. But nonetheless, there's not a lot of support between here and the 200-day moving average. That's why yesterday's price action concerned me some, because it was so, even though it was on below average volume and barely below average volume, it just crossed a lot of barriers that I wouldn't have expected it to have crossed unless there was a lot more substantial volume. But it was like this like sloppy sell off, where it was falling all over each other. And so yesterday we had already broken the 10-day, but we broke the 5 and the 20-day moving average too. And now today we're pretty much just following through to the downside without any real bounce just yet. Even if you look at, in the bottom left-hand corner here, this 30-minute chart of SPY, yeah, you have a couple of 30-minute bars here from yesterday afternoon, but outside of that, there's just really been no substantial bounce, nothing to like take it up into the gap. I kind of think we're going to see a move, maybe not today, but I think there is a chance that it could happen today where we'll get back into this gap. So that's something to keep an eye on. I don't think I want to try and buy this dip at all. We have a few positions already in play. Let them play out. Let them go their own way first. We have Netflix, which this thing has driven me crazy all throughout April. We started off with a really good trade in Netflix where we yielded almost 4% on that trade, but then it's just been really bad ever since. Just a lot of false breakouts. Yesterday, I was really high on this trade. So trust me, I wouldn't have gotten into it again last month or yesterday had I not thought that there was a pretty decent setup there. But we bounced off of this rising trend line here on Netflix, and then we coiled a little bit, and then we were breaking above the previous day's highs, and then the intraday just fell completely apart on it. So it's been disappointing. You got a test going on right now, the 50-day moving average. We haven't closed below that level, but that doesn't mean that from an intraday standpoint we can't break below it. Hopefully that holds, but if we're going to establish new trading lows on the day, I think there's a good chance that the Netflix trade gets taken out again. WBA, you have a decent candle there yesterday on the breakout. That was a really solid day. But today we're not getting a lot of follow through, mainly because of the market stinks. The market's not really giving any help. The volume buzz on it is pretty much flat, negative 4.5%. So nothing to really make any judgments there with. But considering the fact that SPY is seeing below average volume and this one's seeing about average volume, there's still some interest there, I think. If we close around where we're at right now, I'm fine with that. But if we start seeing some selling come in this afternoon and WBA takes out like the lows of the day or goes ahead and takes out our stop loss at 85.98, I won't look back. I'll be glad to go ahead and take those profits, because this is a pretty volatile stock to begin with. WBA, there's not a ton of major gap downs. There's a few back here in February, late January, but that was also because the market was seeing some major sell-offs overnight as well. So I don't attribute that specifically to WBA, but I do attribute that to the overall market conditions at the time. And then, of course, ETFC, and what I'm trying to do here is ride this 10-day moving average up some. So you have this 10-day moving average. It's held on pretty good. It violates it a little bit on an intraday basis, but I'm raising my stop along that 10-day moving average. And while the last 2 days have been down, the uptrend is still well intact. But if you look at the sectors aren't all that hot. You got real estate and technology, which are the only things that are, for the most part, holding up. But you got consumer cyclical or the discretionary. They're down about 1%. Right there. But then you go down to basic material. These charts are really looking bearish all of a sudden. Basic materials, you got defense or staples. They're breaking down pretty well today. That is not a good look. They're below January, February, March, and April lows today. And then industrials. This is the one that probably should concern us the most, because this has been one of the more bullish sectors of all of 2017. And look at it today. I mean, it's getting hammered. And not only is it getting hammered over the last couple of weeks, but it's trying to make some significant new lows and violating the 200-day moving average possibly. So if this market's going to hold up, it's going to need to bounce some, because things like the industrials is going to need to hold this 200-day moving average. You have energy that's seeing some selling, but it's coming back alive a little bit here and staying inside this coiling pattern here over the last couple of weeks. Financial services, even with the 10-day or 10-year treasury yield moving higher today, not so much for the not really providing a help for the bank. So banks XLF down today. So again, you got a little bit of a topping pattern here in the financial sector that has been toying with here for the last few months, going back to late 2017. And today's price action really doesn't help much, in terms of assuaging those fears that this particular sector is rolling over as well. So utilities, not down much. This is probably one of the more bullish sectors that there is right now. You have a solid uptrend, and not much to dislike about utilities. The problem is with the utilities is that if you want to, this is my theory anyways, if you're going to be bearish on the market, I'd rather just go short on the market. And if I'm going to be, that's my phone. If I'm going to be bullish on the market, I'd rather be in something like technology. So utilities is always kind of like that odd man in the middle that I don't really play that much. But yeah, healthcare, one of the stronger sectors today as well. Technology has the head and shoulders pattern, but hasn't quite given up yet. So lots to look at, lots to throw out there to you. I thought I'd do a quick video and explain some of it to you. So have a good day.